Hello, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, welcome back to another exciting week, guys. We're officially well on our way into December. We saw both Ethereum and Bitcoin break through some really big levels this weekend and continue kind of on that grind higher. The ETF hype is, never been higher. Despite that, we saw BlackRock and Bitcoin. They amended their S1 filings with the SEC this last week. And we also saw the SEC reject Grayscale's current application postpone it until January. So a lot of folks are really pricing in or believing that we're going to get this approval for Bitcoin ETF sometime in January. Some other stuff that's going on in the market. We've got Jamie Dimon testifying that cryptocurrency is only used for criminals. And we also have, a lot of kind of movement, I would say, in Congress over, just discussions about the future of crypto, how it should be regulated. Hopefully we get to, some sort of a happy medium there. But in the meantime, I got some cool tokens to talk to you guys about this week. So let us jump in. Okay, first one I have up for you is 2-for-1. So DeFi app Osmosis and Barland Protocol UX chain, formerly known as UMI protocol, they've both proposed a merger of both of their chains. So both Osmosis and UX chain are actually app chains on Cosmos. So just a reminder for how Cosmos work, it's the hub and spoke model. So Cosmos Hub is like their main chain, kind of like you can think of it as like this layer 0. And then there are many other chains on top of it that can basically choose to use Cosmos's SDK or basically you use their framework to build a new chain. And then from that, those individual chains can also decide if they want to rely on Cosmos's shared security. So if they want to say, okay, we will rely on Cosmos security for validating transactions, or we will create our own security. So Osmosis and UMI have both been around for a couple of years now, since kind of like the last cycle. Osmosis has tried to be like this DeFi hub, but mostly they've been kind of like the predominant DEX or DEX chain on the Cosmos ecosystem. UMI has attempted to be a lend borrow protocol as well. But, DeFi to date has been kind of hard to gain traction in the Cosmos ecosystem for a number of reasons, mostly because it's just been a lot harder to access than a lot of the other EVM compatible chains, which includes like Ethereum, Avalanche, BNB chain, etc. So both these chains have proposed a merger, which is pretty cool, since we always love to see M&A activity in the space. The idea would basically be that they would migrate the UX's chain lending logic and then integrate it into Osmosis's decentralized exchange. The merger would commence once governance votes would pass on both of those separate chains, and then they would have to approve that, and then they would combine their TVLs and create this great DeFi hub on the Cosmos network. So if this were the case, the combined TVL for the new network would be about 165 million, which is great, but it's still considerably smaller than Ethereum's Aave and Uniswap, which each boast about 6.4 billion and 3.9 billion TVL respectively. So obviously lots of room for growth, very exciting. To give you a good idea though, UMI protocol has about 1/10 of the TVL that Osmosis has. And you can see that in the price changes this week, because such an M&A would be way more favorable for UX protocol than it would be for Osmosis. Osmosis is up about 10% on the week, and UX protocol is up 52% on the week. All right, next up, I'm going to talk about Mantle. So I think I mentioned Mantle a couple times here. They're a layer 2 protocol. They were spun out of BitDAO, which was Bybit's exchange that they ended up putting a bunch of money in, spinning out this DAO, and that decided to eventually create this L2. So I think of Mantle as like this super well-capitalized, well-funded L2. They have $1 billion treasury, and they've been using it to aggressively grow their ecosystem. So they launched their liquid staking protocol and liquid staking token on Monday, and they're calling it METH. And yes, that ticker symbol is METH. Anyway, but Mantle aims to differentiate itself by offering higher yields via maximizing MEV. So what this means for you, if you're not familiar with MEV, it's basically the idea of like focusing on like how transactions are ordered and executed for certain transactions, not all of them. But the idea is that usually, depending on how they're ordered or executed, those transactions can offer higher gas fee rewards, or it can allow for those transactions to have some sort of arbitrage opportunity. So the idea is that if you have your notes kind of concentrating on like MEV type transactions, in addition to the liquid staking, you can maximize your yield above what the baseline ETH staking offering is right now, which is around 4%. So the METH token is pretty similar in structure to Lido's staked ETH, which basically rebalances and accumulates rewards every day instead of having the price kind of fluctuate differently from like the price of ETH. So that'll be an interesting structure. The DAO is also elected to stake their own ETH treasury to the protocol. And as of today, although this just launched on Monday, keep in mind 2 days ago, the protocol has just over 98 million in TVL. So this could definitely be an interesting one to watch grow. Mantle is up 22% this week on that news. All right, last up, we're going to talk about Helium. So Helium's mobile product officially launched yesterday. They're going to be offering customers mobile 5G plans for $20 a month. So just as like a general consumer, like, I mean, I don't know who else needs to hear this, but like usually like a cell phone plan can start like $50 a month on one of the big carriers. So $20 a month, it's really aimed at, being super economical, very affordable for a lot of individuals who are out there. So Helium Mobile was basically born out of the Helium project, which focuses on offering wireless internet access through its network of hotspots. So although the project initially focused on the IoT Internet of Things market, it has more recently pivoted to offer 5G wireless coverage, similar to large telecom companies like Verizon, T-Mobile, AT&T. So the wireless coverage is going to be provided by users who own hotspot devices, and then users who do so in turn will earn newly minted HNT tokens for providing that coverage. Those who want access to hotspots will pay to access the network of hotspots. Although Helium does not have hotspot coverage to cover the entire US, the introduction of Helium Mobile is made possible through its partnership with T-Mobile, who will provide coverage in areas that are not yet supported. So pretty cool, because it basically means you can get a T-Mobile plan for like $20 a month. This was just rolled out yesterday, so really excited to watch how they grow over the next couple months, since this, definitely obviously requires more than just launching product. There's a lot of marketing involved. We'll see how it goes. One note on this one, when, they did launch this yesterday, late last night, a few crypto Twitter influencers picked up the Helium project and started tweeting about the token. It has led the token to actually rally about 43% in the last 24 hours. As a result, Helium is up 48% for the week. All right, that's all I got for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.